check in with one of our regulars joining us this morning to get into the fundamentals behind the technicals. We've got Everett Millman. He's metal specialist at Gainesville Coins. Everett, good Thursday morning to you. It's not just the indices this week, right? We're talking gold, we're talking copper and silver as well.
Right, Ben. I think that commodity super cycle, although we're probably in the early stages, it does seem to be playing out. We've seen that with gold. We're seeing that now with a lot of the industrial metals. But what's important to keep in mind about gold right now, I think that, Fed policy, the fiscal situation, all of that's going to continue to affect gold on the margins, perhaps. But really, this market is being driven by events in China right now. The People's Bank of China, although their purchases have slowed, they're still consistently buying, and really other central banks around the world continue to pick up the slack. And that makes perfect sense when we see what's going on economically in China, the fact that their property market and their stock market are both facing challenges. And given that the country has capital controls, really Chinese investors don't have anywhere else to turn besides gold and other commodities. So that seems to be what's continuing to drive the rally. And it is, of course, encouraging to the bulls that gold has held up near that $2,400 level.
Yeah. So you got, it sounds like people, PBOC buying a little bit less in terms of some of that trend that we had been seeing, right? It's come off, but you're also noting here how outflows of ETFs have finally slowed, right? So we're kind of seeing that balance come into play, it sounds like.
Right. There are two trends that have been very stubborn in the gold market that seem to be changing. The first is, as you mentioned, ETF flows from North American and European gold ETFs seem to be pausing. So maybe that's, I was going to say, maybe this is an indication that Western investors are again getting into the gold market. And then the other big move that has gone on for really years now is that the gold miners have been lagging the gold price. Finally, some of those miners are starting to see an upturn off their lows. So if this rally in gold is sustainable, I would expect to see those two trends kind of move in the other direction. Speaking
of the miners here, if we pull this chart, we've got gold futures on the screen right now, but GDX, right? You noted the recent run up to, well, just shy of 37.50.
Right, and GDX is really the best indicator for the gold mining sector as a whole. It's really a top-heavy market, so just looking at Newmont or Barrick Gold isn't going to tell us really what's going on underneath the surface.
Okay, I like the broader base representation. Let's talk a little bit about copper. Also, two all-time highs. I just pulled the chart here. We're talking recently just shy of 520, kind of feeding into, again, this idea of a commodity super cycle. Strength in China, kind of a recovery there. We talked last week, I think it was, about some of the efforts to sort of provide stability, easing some of those mortgage requirements and buying up some of those unsold homes.
Right, and this is another market that China is going to loom large. One interesting China trend going on in China right now is that normally the seasonal kind of consumption of copper in China tends to increase during the summer. So you see a lot of dishoarding, you see a lot of inventories coming down, and that hasn't quite happened yet. I do suspect we could see a replay of the fall of 2023 when the copper market was very hot, and then there was this massive buildup in the Shanghai inventories of copper that really put a lid on prices. We may be seeing the beginning of that, but I think that yesterday's dramatic pullback for copper, almost 6% to the downside, that likely is because we're a bit overstretched at those levels above $5 a pound. But looking forward over the medium term, really all of the fundamental factors are pointing to copper trading higher. The PPI for copper miners has been rising significantly, meaning that the costs of getting copper out of the ground are rising. Yeah. So again, we have some of these challenges to the copper supply that point to a secular bull market.
Yeah, I'll be curious to see if copper finds some support here and starts to balance around 5 right now. The bulls would be pretty content with that. Industrial metals outperforming gold, you say, but a bit overbought here. I think that kind of feeds into maybe copper pulling off that $5 level. It's also a key psychological level, I feel like.
Right. I mean, it has to be. It's the first time that we've ever reached that level, and it was sort of the top end of most price targets coming into this year. So the fact that already in May we have, however briefly, we've surpassed that level, it does matter psychologically in the same way that for many years, $2,000 an ounce was that psychological kind of barrier for gold.
You've seen some pretty good volume on the silver rally as well, it looks like.
Right. I think that anytime you see price movement on high volume,
Yeah, with volume associated with it. Yeah.
right, right. I think that that shows strong conviction.
Yeah.
Of course, we did get, again, another volatile pullback in silver yesterday. I think that perhaps the volatility that we've seen in the silver market is spooking some of the longs, but really that high volume conviction shows that silver is beginning to break out to the upside. And if the bulls can defend $30 an ounce as support, that would be huge. That would be a complete flip of where our previous resistance levels were. And again, portends higher prices going forward.
Let's talk about what's been a little bit of a laggard here, and one we haven't really spoken much about on the Future Show for months. I feel like over a year now, platinum finally emerging from a 15-year downtrend, you say?
Yes. Looking at the longer term chart, you have to go back to about 2010 to find any sustained upswing in the platinum price. It really has been struggling to get out of this kind of sideways downward channel. And of course, when I'm looking at the macro fundamentals, there are some supply challenges going on with platinum. The two countries that supply the vast majority of platinum to the market are South Africa and Russia. Obviously, right now, there are some economic sanctions on Russia that are threatening their supply of platinum getting to the market. And then we have some big elections coming up in South Africa. It's not just an election year in the U.S., Ben. So that, again, could threaten some of the normal flow supply of platinum. And again, we're starting to see some green shoots, some positive indicators there that really platinum is going to probably follow those other industrial metals higher, like silver and copper.
All right, Everett, we appreciate it. I think it's a good time to keep the focus on these metals because it's not just the indices. These are in well-defined trends here. Again, as I like to say, textbook examples for those of us that are students of price. And if you're trading, I don't care whether it's with or against trend, you are. So it's important to get a little bit of insight in terms of the fundamentals as well. Everett Millman joining us this morning, metal specialist at Gainesville Coins. Everett, thanks to you. Now, while we are seeing copper, silver, gold, right, and some of the other metals we were talking about participate in the super cycle, we've got some other products, I think, that have been range bound and contained have helped kind of keep stocks at these elevated levels. Let's get into them real quick before we get into some data here at the bottom of the hour. We've got crude oil. This is a product that's remained very range bound, right, and a level-headed approach towards the geopolitical tensions and some of the unease, the uncertainties. We saw that spike high back to 95, if you remember, in September of last year, all the way back down in the end of last year to 67. And remember, investors don't want to see crude on the extremes at all, right? Up at 95, it raises concerns associated with inflation. Down at these lower levels, it raises concerns about demand ultimately and the economy. Is it starting to falter? So kind of right in that sweet spot here. Speaking of sweet spot, a level-headed approach towards some of the unease, the speculation as of recent, moving away from geopolitics more towards monetary, towards fiscal policy ultimately. Taking a look here, you can see the dollars had a level-headed approach towards all of it. 107, upper extreme from last fall, again down to end of last year, beginning of this year, around 199-ish, 101 area. And then take a look, one more product I just wanted to leave you with in terms of just focusing on some of these markets, because it's not just all-time highs here, right? We have a few that are very range-bound, very contained, a very level-headed approach towards all, and one could argue feeding into those that are on the move higher ultimately. So, yeah, I think if the dollar were to get back on those extremes, or if yields, or if crude were, we'd be talking about a different story in terms of stocks, that's for sure.